Hi, I'm Erica Douglas from erica.biz, and today I want to talk about why and how to do a financial model for your business. Now you may be thinking, God, I'm an entrepreneur. I just want to get back to building my product and getting customers and all of that fun stuff that comes with building a business. And I'll be honest with you, financial hasn't always been my strong suit in running a business either, but I think that's why building a financial model is so important for your business. It's also one of those things where it seems totally overwhelming. You read tutorials online on how to build a financial model and you end up spending hours playing around with Excel spreadsheets. Well, the great news is I found one online. I paid $40 for it. I've got a coupon code so you can get it for less than that because I talked to the author of it after I paid for it and told him how awesome I thought it was. It saved me hours of time, so I'm going to walk you through how to do a financial model. But first, let's talk about why it's so critical for your business. I'm going to flip to the next page in this financial model spreadsheet. This is the one that I bought and that you can buy as well. So all of the cells that are highlighted in this bluish gray color here are cells that you can modify. And you're going to want to spend a little bit of time playing around with each of this. But the basic idea here is to figure out how many sales you want to make. And by the way, he has different models for consulting, for SaaS or software as a service companies, and even for regular product sales companies. I happen to buy the software as a service one because that's what my company does, but you can buy whichever one you prefer based on whatever your company is doing and what makes most sense for you. And what you want to do is, first of all, you want to look at what kind of plans that you're offering. Then once you put in each plan's name, you're going to want to decide how much you want to charge per month for your plans. And remember, you can change all of this as you go. So this is really useful if you're starting to build your business and you want to understand the difference between, say, offering a $49 a month plan and a $99 a month plan. How many customers will you need in order to hire the people that you need to hire or in order to get the income that you need to get from your business? That's what this is going to do. So after you type in each plan's name, and if you don't know yet, or if you're just starting your business, you can leave that the way it is. Type in the monthly fee that you want to offer for those plans. And then I would recommend for now, if you're just starting your business, to leave all of this stuff the same, the sales commission expense. With revenue share, notice he's got some notes in here in case your app is hosted on an app store or something like that, where they're taking a percentage of the revenue. In my case, we sell our app directly, so I went ahead and modified these to 0, 0, and 0, but go ahead and modify that as you needed. Sales commission expense, I left at 5%. What you're gonna wanna do is figure out what are your payment processing expenses. We use Stripe, so that's 2.9. And how many customers do you currently have on each plan? Then you're going to want to add in your annual churn rate. The churn rates are going to be higher on your lower price plans. You can leave those as is for now if you're just starting your business or if you don't know your churn rate. Then this next column is the month of initial sales. So what that means is we start out in this year, your current year. And so the month of initial sales would be, okay, I'm going to start selling this in March, June, and September of this year. And you can change that to whatever month you plan on selling. So in our case, we're going to say June for this, and then these higher price plans, we're going to say July and September because we'll probably need to add in more features in order to get those plans, sold to more customers. Then the initial month of sales, how many of these are you planning to sell? Maybe you only want to sell 5 of these in your first month, and then in July, maybe you're going to sell 1 of those, and then in September, you're going to sell 1 of those. Now, in each month of the first year, which is this year, how many of these do you expect to sell? Then year 2, 3, 4, and 5. And now just with this, just having done this, you can see I've ramped everything up year 1, 2, 3, 4, and 5. And I cut off the growth a little bit on year 4 and 5 instead of just doubling every year like I expect to for the first few years. Already, it's going to start to generate charts for you so that you can see what kind of revenue that you're going to have. Already here, you can already see your revenue projections start to happen. And remember, I didn't modify anything on this spreadsheet. I simply went ahead and figured out how many plans do I think we're going to sell. The next piece is to go in and figure out how many employees do you need. And there's really cool stuff in here based on how you hire your employees. Some employees you may want to do like a salesperson, 1 sales executive per 100 new subscribers. In some cases, you may want to hire based on monthly revenue, for instance, a customer service representative. In some cases, you may want to just hire a person based on a time frame, like a COO or a CFO based on a certain time frame when you know you're going to have enough revenue to support those people. Go ahead and add in the salary that you think you're going to want to offer. Then as you scroll to the right, you'll see an expense plan. So you're going to want to figure out what your main expenses are. In this case, I changed almost all of them for my business. Office rent was the only one I kept the same. In our case, web hosting fees were going to be a pretty major expense because we have some very data intensive things that we do with our software. So I added in a web hosting expense and went ahead and changed that. And this is going to be per month. So as you can see here, this is the year that you're going to start in, 2013, which is, I went ahead and added 2013. Then add in each of these expenses. How much do you plan to spend on advertising, rent, web hosting fees, and any other fees that you know you're going to have monthly expenses for? Then, which people do you plan to hire? Here, if you're not planning on, for instance, hiring a marketing communications person, you can go ahead and zero those out until the month up here in which you want to hire that person. So if you're not going to hire someone until the beginning of next year, you start putting 1.0 in there for January 2014, but you put 0 in for all of your months in 2013. That way, your expenses start to balance out with your revenue. Here again, as you change your hiring plan and flip to the other sheets, you can start to see how much revenue you're going to have per year and how much money you're going to make or lose. What I found to be most useful for this was actually our cash position. You can add in equity raised, what month you raised it in, and that will give you your cash position. In our case, you can see here that this is the example spreadsheet, that our cash position with a $2 million cash infusion to begin with is strong. Then we burn almost all of it in the first year, and then we expect to go ahead and add in another $2.5 million. Now, that may sound really big for your business. It's actually bigger than the money that my business has raised as well. So I went ahead and added in the correct numbers for how much money we've actually raised. What this told me as I was working on this was that we actually don't need to raise as much money as we expected. If our sales stay as strong as I believe they will, we are going to not need as much money as we thought we did. So that's great because that means we can give away less of our company or attract a higher valuation. One of the things I found so incredibly useful about this financial model is that it helps bring context to situations like this. For instance, in here, we just plotted a growth chart using Excel to show exactly how we're going to get to $1.75 million annual revenue run rate by this time next year. But what I wanted to point out using the financial model is exactly how we're going to do that. How many customers do we need per month to do that? What do those customers look like? Are they small customers or large customers? And exactly what sales targets do we need to hit in order to get there? I will tell you that by building this financial model and bringing it to investors we'd already been speaking with, we managed to close over $110,000 in new financial investment commitments to our company in a week. So this is substantially worth the $40 that I paid and the $35 with the coupon that you would be able to pay for the financial model, especially if you're raising capital. This is critical to have. And in fact, one of the investors who invested was the investor who originally recommended that we get and build a financial model. I'm really grateful that I happened to find one that was already available and I just had to fill in a bunch of numbers, which took me a few hours. And now we know exactly how many sales we need to have and how much money we need to raise in order to meet our revenue goals. And that's been so critical for my business, which is why I decided to spend time writing a blog post and doing a video for you to show you how to do it too. So go ahead and go to bit.ly/startup financial model. Take a look at the financial model. And I really hope that you invest in this. The guy who wrote it, Wade, is an amazing angel investor, venture capitalist, and he's been an entrepreneur as well. So he's been on both sides of the table. And in speaking with him, I've been really impressed with why he built this financial model and how he's been using it in his investments as well. So I wish you luck with your business, whether it be consulting, product, or software as a service. And I hope that you use this financial model wisely to help you grow your business, get investors, set sales targets, and understand exactly when to hire people. This has been one of the most critical things for my business, and I know that we wouldn't be looking at a $1.75 million a year revenue run rate and looking at $18 to $20 million a year, 3 to 4 years out, if we hadn't built this model and know exactly how to get there. Thanks so much. I'm Erica Douglas at erica.biz, and make sure to check out the Startup Financial Model.